Hey everybody, so I just wanted to do a quick market overview and I wanted to talk about some of the news that's going on right now. So we have a less hawkish Fed due to the war. We have oil, wheat, and natural gas prices skyrocketing. Oil alone actually had a $19 swing, a $19 to $20 swing just this week. And just to give you an idea, 7% of our oil comes from Russia. Now, we also had news that Facebook was blocked in Russia, and we also have a revised forecast of CPI potentially coming in at 7.9% year over year for March 10th, looking back on February. So the last report was 7.5 when it was expected to be 7.3. So I'm a little bit worried about that, and you probably should be too, because if that CPI number comes in hot, I think we're going to get a lot of news outlets calling for the Fed to do something. So it's going to put more pressure on the Fed. Now, I want to go straight into the charts here. So when we look on SPY, you can basically see that we're up from the post market yesterday. Yesterday, we actually went down pretty hard. I think we went all the way down to like 428 when that news happened with the nuclear plant getting shelled. So since then, the nuclear plant actually, the fire actually got extinguished, and there wasn't really any traces of radiation. So I think that's a little bit some of the reason why the market just rebounded just a little bit. But overall, things still don't look too good. If you see, we're still in this bearish channel here, and it's becoming more clear that we rejected right here right around that 441 area. So the one thing I want to point out is that we actually found some decent support right around this 428 area. So it is very possible that we could rebound and we could probably test maybe 437 is kind of like the next area where if you are going to pick up a short position, if you're going to get grab puts or whatever, this might be a good area. And you would want to set your stop loss a little bit above. But generally, if you guys are picking up calls around this 428 area, you want to, I would just suggest waiting a little bit, seeing if that support gets broken, letting the premiums actually fall a little bit before you go buying a call, and then just kind of ride that out a little bit, see if we rebound. But ultimately, if you're buying calls in this market, you should be very risky, or you should consider your risk and take profits as soon as possible with calls. With puts, you can probably hold them a little bit longer just because we've been in this downtrend since, let's see, since January the 4th. So this downtrend has been going on for about 3 months now. And I do think we're going to reach some sort of a bottom here in the middle of March, possibly. And if we do a rebound rally into the new quarter for April, I would definitely get a little bit more defensive because we don't know how the earnings situation is going to play out in late April. So if we see a decent rally before earnings in April, I would be looking into buying hedges like UVXY or getting puts on Apple or something of that nature just to kind of hedge for May because generally they say sell in May and go away. So May is generally not a very good month for stocks, but April generally is. So moving on to the next ticker, I'm going to take a look at Apple here. Now I was really looking for Apple to possibly make a run at the end of the day and reclaim the 100-day moving average. So the 100-day moving average right here is 164.04, and you can see that we closed below that. So where can Apple go from here? I mean, we could still flirt around with this 100-day moving average. We could still go back and forth between it. You can kind of see that we did over here. But ultimately, if I zoom out a little bit, if we continue falling, I think we can make probably a pretty quick trip back down to the bottom of this trend channel. And you can see that that's almost, let's see, yeah, if I'm looking right here at 155, I think that's a likely area that Apple could find a bit of support at. So, I mean, that's 8 points from where it is right now. That could easily take the SPY down to the low 20s. So just keep that in mind. There's a lot of risk here in Apple. And Apple is one of the last man standing because it is above the 200-day moving average, whereas a lot of the other stocks are below. And we could see this 20-day and the 50-day starting to curl down. So once we get these moving average crossovers underneath the 100-day moving average, then things are going to start looking a little bit worse for the broad markets. Now, looking at Google, we have the death cross on Google. Got the 50-day curling underneath the 100-day. It's basically touching right now. So yeah, it's actually, let's see. So the 50-day moving average is at 2,750. The 200-day moving average is at 2,751. So the 50-day moving average is actually underneath the 200-day moving average right now. So we have the death cross. And notice that the death cross is right here on this trend channel. And you can see that we rejected the 20-day moving average. And we almost tried to reclaim that 200, but you see we didn't even make it past the 20-day moving average. We got the 20-day moving average also curling down. So things don't really look too good. I think it's possible that we could maybe do a triple bottom here, and then we'll see from there. If we break this triple bottom, there's quite a bit of downside. I mean, you can see that Google just hasn't really built out that much support in this last 2 years here. It's just been going straight up. So if it does fall, I really don't know where it's going to fall, but I think that'll just probably depend on the S&P 500 and where you see buyers stepping in. I happen to think that's the low 400s if we do get there. Now, looking at Microsoft, you can see we're well below the 200-day moving average now. So the 200 moving day average is right around 300, and we're like $10 below that right now. And we got this 20-day moving average curling underneath the 100-day moving average. We have this 50-day underneath the 100-day, and the 50-day looks like it's just continuing straight down. So it could be a while before it actually crosses under the 200-day moving average, if it does. And where could Microsoft potentially fall? I mean, I would think similar situation with Google. We could have something close to maybe like another bottom here at this wick right here. Or we could even go as far as that wick that we put in on late February. And looking at Amazon, Amazon doesn't look too good either. So we could see that this 20-day moving average was curling up, but now we could see that it's flattening out. We could see this 50-day moving average is coming down quickly. And I do worry that they're going to intersect. So we have the straight downtrend. And like I said in the previous video, Amazon has quite a bit to fall. If we do go into a stock market crash or a very heavy correction, I do think we could close this gap right here at 2,461. Looking at NVDA, NVIDIA actually closed underneath the 200-day moving average. So 200-day moving average is at 233.83. We're at 229.36. And right now we got the 50 crossing underneath the 100-day moving average. We got the 20 pointing down. It looks like it wants to go underneath the 200-day moving average here. And where can we find support? I think support is likely around this area right here, around like 207. You can see there's that gap up right there and this prior top. And you can see there's these two touch points right here. So Facebook, with that news, I'm actually surprised they didn't fall more, but I'd be looking to buy Facebook around 190 if we get there. And then if we get below 190, I really got to zoom out here. I would think 172 is likely area. And that will probably be like accelerated selling. I would think like a crash is probably happening at that point, a very mild one. So Netflix, also well under the 200-day moving average, under the 250-day. What I do want to point out is I have this long-term trend line right here, and it's been catching all the prior crashes on Netflix. So right now we're right at that level. So um, maybe this is a good buy right here. Maybe if you don't own any Netflix and you just have a bunch of cash on the side, maybe you start buying right here just a little bit. But understand that this could fall to 337, and if it falls below that, it could fall all the way to 286. So those are probably two of the biggest gaps right here that could be filled potentially. But right here, I would say that Netflix is probably a good nibble. Tesla, if we look at Tesla, we just barely closed above the 200-day moving average. So actually, I lied. We actually closed underneath it. So the 200-day moving average is 839.78. We closed at 838.29. So that's probably not very good here. You can see with Tesla, we broke this overall trend line. It's been holding for quite a while. Let's see. This goes all the way back to 2020. You can see how closely we messed with this trend line back here in 2021. So we broke under that. That was probably like the first indicator right here that Tesla was going to sell off. And then now we're underneath the 200-day moving average. We got the 50 underneath the 100-day. We got the 20 curling down pretty hard. We could see the 20 move underneath the 200 if we see continued selling. And we're in this downtrend right here. So where could Tesla find some support? Let's zoom out a little bit. Let's see. That was where we found support on that one nasty sell-off. I would think next support on Tesla, if we continue to fall, is probably, let's see, let's say right around here, like 760, 769, 770. But yeah, just watch out with Tesla. It's had such a run that if we go into a stock market crash, Tesla is probably going to be the one that hurts the most, in my opinion. So now going over to gold, I mean, I wouldn't say buy gold now because you missed this massive run up. And what I do want to point out is we're actually higher than the last two previous highs. So if I zoom in right here, you can see 183.21 was the previous high in early January. We also had another previous high in November of 2020 of 183.53. So where is the next resistance? It's going to be right here at 185, 185.01. And then after that, it's going to be at 187. Then after, probably like 190. So just know that gold is overextended right now, and there's quite a bit of risk if you buy in here and you don't cycle out. So risk to reward, I don't think there's a whole lot. Probably more risk than reward. And just to point out, we are very bullish. We had the full bull trend. Now, if we're looking at Moss, this is the fertilizer stock. I'm zooming out here. You can see that there's some resistance. I'm not really sure where this is. Like maybe around 62 or right around 60. It's a little hard to tell, but there is some resistance in that area, and we've just been going straight up. So keep in mind, if you miss this move right here, I don't think you should be getting in. So definitely don't just be buying this because everybody else is buying it. CNBC is pumping it, and just about every YouTuber is talking about buying fertilizer stocks. So don't just go buying this because you missed a lot of the move. And now it's just overbought, in my opinion. And if the war kind of subsides, if things get better over in Russia, you could see that this come just crashing down. So definitely be mindful of that. I want to point out VIX. Intraday, it actually got as high as 34.65. But where is actual resistance? We're going to see resistance right around 37.80. So I just get this feeling that, maybe we could actually get that high and then reject. So we'll see. I mean, next week could be a doozy just because of that CPI. So I hope this was helpful to you guys, and good luck next week.